crypto, it's like digital money but different. Ever heard of Bitcoin, Ethereum? These are just two of the many cryptocurrencies out there. That's cryptocurrency digital money. But it's not just any digital money, it's decentralized and operates on technology called blockchain. It's not controlled by governments or banks. This means no single entity has control over it, making it a revolutionary financial system. People use it to buy stuff online, invest, or just hold on to it, hoping it goes up in value. You can purchase anything from a cup of coffee to a luxury car with cryptocurrency. Lots of people are interested because it's new, exciting, and potentially very profitable. The idea of making a quick fortune is appealing to many. Think of it like this: you know how gold is valuable? Gold has been a store of value for centuries. Cryptocurrency is kind of similar. It's digital gold. Just like gold, people believe it will hold its value or even increase over time. People buy it and hope its value increases over time. They see it as a hedge against traditional financial systems. But just like with gold, you can't just dig it up in your backyard, unless you have a really high-tech backyard. Mining cryptocurrency requires specialized equipment and a lot of electricity. You need to buy it, and that's where things get interesting. There are numerous exchanges where you can purchase cryptocurrency, each with its own set of rules and fees. Lots of people are making money with cryptocurrency, but it's not without risks. The market is highly volatile and prices can swing dramatically in a short period. It's important to understand what you're getting into before you invest any money. Research is key, and knowing the risks can help you make informed decisions. That's what we're going to talk about today. We'll dive into the world of cryptocurrency, exploring its potential and pitfalls, so you can navigate this digital frontier with confidence. Hodling. Sit tight and see what happens. The term hodling originated from a misspelled forum post, but it has since become a popular strategy in the cryptocurrency world. It essentially means holding on to your cryptocurrency investments, regardless of market fluctuations. Imagine buying a slice of pizza for $1, then a few years later, that same slice costs $10. This is a simple way to understand inflation, but it also mirrors the dramatic price changes seen in the cryptocurrency market. That's kind of what happened with Bitcoin. In its early days, Bitcoin was worth just a few cents. Fast forward a few years, and its value skyrocketed, making early investors incredibly wealthy. People who bought it early and held on to it saw massive profits. These early adopters believed in the long-term potential of Bitcoin and were rewarded handsomely for their patience. That's hodling, basically, buying and holding on to cryptocurrency for a long time even if the price goes up or down in the short term. It's a strategy that requires a lot of patience and a strong belief in the future of the cryptocurrency you're investing in. You're betting on the long-term growth of that particular cryptocurrency. This means you need to do your research and choose a cryptocurrency that you believe has strong fundamentals and a promising future. The good thing about hodling is that it's simple. You don't need to be a trading expert or spend hours analyzing market trends. You buy, you hold, and you wait. It's a straightforward approach that can be less stressful than trying to time the market. No need to constantly check prices or make complicated trades. This can be particularly appealing for those who have other commitments and can't dedicate a lot of time to managing their investments. It's a good strategy for beginners who are just getting started. It allows them to get involved in the cryptocurrency market without feeling overwhelmed by the complexities of trading. But hodling isn't without risks. The cryptocurrency market is known for its volatility, and prices can swing dramatically in a short period. Cryptocurrency prices are volatile, meaning they can go up and down a lot in a short period. This can be nerve-wracking for investors, especially during market downturns. If you're not careful, you could lose money, especially if you panic sell when the price drops. It's important to stay calm and stick to your strategy, even when the market is turbulent. Staking your crypto's side hustle. Imagine your money in a savings account earning interest. Staking is kind of like that, but with cryptocurrency. You lock up your crypto for a certain period and earn rewards for doing so. It's like your crypto is working for you, generating passive income. Different cryptocurrencies offer different staking rewards. Some offer high rewards but also come with higher risks. It's important to do your research and choose a cryptocurrency that you're comfortable with. Staking can be a good way to earn passive income on your cryptocurrency holdings. It's generally less risky than trading, but it's not entirely risk-free. There's always a chance that the value of your cryptocurrency could go down while you're staking it. Averaging in. Don't put all your eggs in one basket. Remember the saying, "Don't put all your eggs in one basket"? It's a timeless piece of advice that applies to many aspects of life, including investing. That applies to cryptocurrency too. Diversifying your investments can help manage risk and increase the potential for returns. Instead of investing a large sum all at once, you can invest a smaller amount regularly over time. This method is known as dollar cost averaging. Dollar cost averaging is a strategy where you invest a fixed amount of money at regular intervals, regardless of the asset's price. For example, you could invest $50 every week in Bitcoin. This way, you buy more when prices are low and less when prices are high. Some weeks, the price might be high and other weeks it might be low. This approach helps smooth out the volatility of the market. By averaging in, you're reducing the risk of buying at the peak of a price bubble. This can be particularly useful in the highly volatile world of cryptocurrencies. Dollar cost averaging is a good strategy for beginners because it takes the emotion out of investing. It helps you stay disciplined and focused on your long-term goals. You're not trying to time the market or predict when the price is going to go up or down. Instead, you're committing to a consistent investment plan. You're simply investing consistently over time. This steady approach can help build wealth gradually and reduce the stress associated with market fluctuations. Do your homework. Not all that glitters is gold. Just because everyone's talking about cryptocurrency doesn't mean you should jump in blindly. It's important to do your own research and understand what you're investing in. There are thousands of cryptocurrencies out there, and they're not all created equal. Some are riskier than others, some have more potential than others, and some are outright scams. Before you invest in any cryptocurrency, take some time to learn about it. What problem does it solve? Who's behind it? What are the risks? Don't just rely on what you read online or hear from friends. Do your own due diligence. Starting small, dip your toes in first. You don't need to be a millionaire to invest in cryptocurrency. You can start small and gradually increase your investment over time as you become more comfortable. Remember, only invest what you can afford to lose. Don't put your rent money or grocery money into cryptocurrency. Start with a small amount that you're comfortable losing, and gradually increase your investment as you gain experience and confidence. There are many platforms where you can buy and sell cryptocurrency. Choose a reputable platform that's easy to use and offers good security features. Crypto made easy, your path to profit. Cryptocurrency can be a great way to grow your wealth, but it's important to approach it with caution. Don't let the fear of missing out lead you to make rash decisions. Remember, slow and steady wins the race. Start small, do your research, and invest responsibly. By following the tips in this essay, you can make cryptocurrency work for you and potentially profit from this exciting new asset class.